Let's dive in here. And what I want to do is, we have kind of a loosey-goosey format here tonight, and really it's just introducing an incredibly cool tool that Ophir has put together. And over what I'll do is in a few minutes here, I'll turn it over to you, so you can really just kind of demonstrate. And I'll show you guys, a couple of things. And I mean, here's the thing, and here's kind of the tricky thing, is that, well, let me grab my, I'll share audio, share some screens here. What'll happen is, boom, there we go. What'll happen is we'll look at something like, say, Google, right? And Google has earnings coming up, and as you guys know, and I particularly like to play stocks in front of earnings and try, with the idea that there's going to be some increased volatility in front of earnings, which is always fun. So I'll look at a chart and just say, wow, does Google tend to run into earnings? But you're really just eyeballing it. Or you'll say, what happens after earnings, et cetera, et cetera. And you can eyeball a chart, and that's okay. But what's better, and by the way, Ophir, you guys have, it seems like you guys have significantly increased the speed of the servers on this. It's been lightning fast. But what I like about some of this cool stuff, we could say like, well, okay, well, what happens if we would say buy calls 5 days before earnings and close them out 1 day before earnings? How does that work? On Apple, oh, wow, that works pretty good. If we bought Delta 10 calls with 3 wins and 5 losses, we'd still make 200% return on our capital, right? Which is kind of cool. But if we did this on, say, Facebook, okay, it wouldn't work at all. So what's cool about this is you can actually get to know a stock's personality for a specific time prior to earnings, okay, and a specific time after earnings. So let's just say that we opened up a position, 1 day after earnings and then closed it 5 days after earnings. Would that be different? Well, it's like, okay, now you can go through and say, well, that actually works well for Facebook, but it's not a good, a huge hit ratio. Or what if we sold put spreads instead? So what's cool about this is that you can just kind of see what works and what doesn't work within a span of time over the course of 6 months, 1 year, 2 years, etc. And it's magical. So what I'd like to do is, if you're assuming that you are lined up here and good to go, what I'd like to do is just kind of turn this over to you for a bit and have you, I think you've got a video that's going to explain some of this, and also just kind of dive in. Really just kind of showing like, hey, this is the methodology kind of behind the madness and how it works, and kind of the latest things that you guys are working on. And I'll be sitting here as a bystander as well. So why don't we give that a shot, and let's see how that works.
Sure. Thanks, John. Can you hear me? Can everyone hear me?
Loud and clear.
Great. Yeah, so, I'll just take a step back, and that was a great intro. Thank you. I think when it comes down to it, I think as we're all as traders know that we want to have a plan in place, and sometimes that plan has to move quickly. If you're trading intraday, you're looking at charts, things like that, but sometimes you don't have to go that fast, and you want to be rather methodical, and that's what the option backtester allows you to do. Which options to trade, which expiration, when do you exit, should you have a stop, and that's what I'm going to demonstrate. So I have a pre-recorded 10-minute movie which focuses on earnings, and afterwards I'm going to dive even deeper into some non-earning strategies, and also I'm going to talk about, for example, what happened to Netflix today and how a tool like we have could have really shown you the opportunity in Netflix. And of course the stock is up. It is after hours. Of course, we don't know how it's going to do tomorrow, but it's up $18 while the weekly option's priced a $12 straddle. So I think that perhaps Jared is going to help me with the movie. If not, I can push play myself. I'm not sure if that's supposed to be me.
Do you know how to do the screen share?
Let's see. I can share a screen. This will stop other screen sharing. Yes.
Yep, you can kill mine.
All right. And I will do this desktop. All right. So you guys can see the backtester. Is that right?
Perfect.
Okay, awesome. So I'm going to try this. I'm going to try and play a video, and if the audio doesn't work well, I'll just stop it in the middle and I'll do it by hand. But it's much better with the video because I've got it cut nice and short so we can get to some other things afterwards. So just give me 10 seconds. Pull up this video. All right, here we go.
And I've already learned something new. I didn't know you could do that with multiple symbols.
So I'm just going to pause it right now. I don't want to go through a 10-minute video with everyone saying, I can't hear this guy at all. Was that all right?
I did not hear anything.
Oh, well, that's not good. Let's try one more time. All right, I'm going to try just for a couple seconds. If not, I'll just do it by hand. I have it written out just in case we were to face this. So hold on 1 second. All right, let's try again. So I'll just try for 10 seconds. Don't worry, I won't go away. Let's start it over. Pre-earnings trades and post-earnings trades. They also look at aggressive momentum trades, directional bets, volatility bets. All right, is everyone okay with that?
Yeah, that was loud and clear.
Okay, here we go. No direction and also volatility scalps. So there's something here for everyone. So let's get started. We'll start with our first pre-earnings pattern. I call this a directional bet on optimism. So one of the least recognized but most important phenomena surrounding this bull market is the amount of optimism that sets in the 2 weeks before earnings in the mega technology stocks. We're talking the FANG stocks. Now, this is totally irrespective of whether the stocks have a history of beating earnings. In fact, many of them don't. But in the 2 weeks before earnings, there is a massive momentum rally into the event. Let's look at a simple idea. Let's just buy a monthly call option in Alphabet 2 weeks before earnings and selling the call before the earnings announcement. So we'll get long a call, we'll go to custom earnings handling, we'll open the trade 14 days before earnings, and we will close the trade 1 day before earnings. We are not taking an earnings bet. This is a pre-earnings trade. And here are the results. We can see across the board, this has been a winner. It looks like the 35 delta has been the sweet spot. And just to see what's happening and how these ridiculous returns are forming, we can look at the stock price. This is a 2-year stock chart of Alphabet, where the blue E icons represent the earnings dates. What's so interesting here is that while the stock almost always rallies before earnings, you can see that with these little yellow arrows into the earnings. The stock goes down off of earnings a lot. In fact, that's what these yellow rectangles are. This is how many times Alphabet missed earnings. It's just a coin flip, but it never interferes with this optimism, this bullish momentum. Now, by the way, if you're wondering why I'm not looking at more data, that's actually on purpose. If we're going to try a pre-earnings momentum trade, we really want to focus on the most recent data. But there is a time when more data is better, and we'll look at that soon. While we're looking at this, we might as well look at the rest of FANG. So I'm just going to put the rest of the tickers in here, comma delimited. As I said, this works with all of the mega tech stocks, but what we need to do to find the best trades is to focus on the win rates. Netflix and Amazon are a coin flip. Even though the returns are positive, these aren't the best of breed. But a good trade turns into a great trade only after we do risk control. So let's drop a tight stop on these calls and also a tight limit. We'll go down to the close trade when section. We will close these long calls if they go up by 30% in a 2-week period. And we'll also close them if they go down by 30% in a 2-week period. All of a sudden, the trade is clearly in Alphabet and Facebook, not Apple, Netflix, or Amazon. So let's focus on those two. Now we can see the staggering returns, and we can see 15 wins on 1 loss if we held these 2 as a portfolio. And just so you know, we're not pulling a fast one on you, and that calls always work on these companies, we can just look at the 15 days after earnings. So we'll open 1 day after earnings and close 15 days after earnings. These trades are actually negative. So this is in fact a pre-earnings momentum trade based on the personality of this bull market. Now let's focus on our second pre-earnings trade. And this is not a directional momentum bet. Rather, it's a volatility momentum bet. This trade takes no stock direction risk at all. We'll look at all of FANG again. And this time we're going to test buying an at-the-money straddle, but now we're going to go to custom earnings, and we're going to open the trade just 6 days before earnings, and we'll close it on the day of earnings. Now here's a note. All of the FANG stocks report earnings after the market closes. So when we close the position on the day of earnings, we're still not taking the earnings risk. If you do this with other companies, make sure you know what time they report earnings, and you may have to change this number to a 1 rather than a 0. Let's see the results. We've already got our strategies for Facebook and Google, and it looks like of the remaining ones, Apple looks the best. It has the highest return and also the highest win rate. Let's focus on Apple. Now you'll notice that we still have our strict limits and stop losses. And what we get is a 43% return over 7 earnings cycles. But remember, this is just a 6-day trade each time. So we're actually looking at an option trade with no directional bias that went up nearly 200% on an annualized level. All right, so now we have our Apple pre-earnings trade, which is non-directional, and we can add that to our Alphabet and Facebook trades. Now this was slightly more advanced, which is to say this was buying a straddle rather than a call. So we didn't make a directional bet, but we did make a volatility bet. We got long volatility. Now let's look to our third pre-earnings trade. This is going to get a step even more advanced, and I would consider this next trade we're going to look at together to be expert level option trading. We're going to look at a trade that is delta neutral, earnings neutral, and much closer to volatility neutral. We're going to use a pro feature, which is a custom strategy. This feature only comes with Trade Machine Pro. Now let's build our strategy. So click custom and click add. We're going to want to buy an at-the-money straddle that expires in 30 days, so a call and a put. And we're going to want to sell an at-the-money straddle in the weekly options. So again, we're buying an at-the-money straddle with the 30-day options. We're selling an at-the-money straddle with the weekly options. We're going to close the entire trade together, so we're going to check this box. Let's give the strategy a name. We'll call it a long-short straddle, and then we save it. Now remember, we're still looking at this very short window, specifically opening the trade 6 days before earnings and closing on the day of earnings. Again, these stocks report earnings after the market closes, so a 0 is okay here. If any of these stocks reported before the market opened, we'd have to put a 1 here. Let's go ahead and do this for all of FANG. And here are the results over 2 years. It's pretty clear now that we should be focusing on Amazon, which has won all 8 times with a 207% return. But this is actually a strategy where we would want more data rather than less. This is not about momentum, but about a volatility pricing mechanism or a volatility scalp. So now we take a little bit more data and we'll look at 3 years. Let's focus on Amazon. Now, this trade should not vacillate a lot, and if it does, we have made the wrong bet and we're going to want to exit. So let's tighten our stops and our limits down to 20% each. That is, if the strategy is up 20% within the 6-day period, we'll close it. And if the strategy is down 20% within the 6-day period, we'll close it. All of a sudden, we have a trade that takes no stock direction bet, no earnings bet, almost no volatility bet, has extremely tight stops, and we see a 286% return with a 92% win rate. That is, it has won 11 of the last 12 earnings cycles. Of course, with every back test, we can just click on the tile for details. Here we can see the 286% return in the strategy versus the stock. We can see the average win versus the average loss in dollar amounts, and the gross gain and gross loss. And of course, with the strategy that's this complex, you probably want to go trade by trade, download it into Excel, and do some further analysis. And now we have our pre-earnings trade for Amazon, and before we found the trade for Apple, and then before that we found it for Alphabet and Facebook. Here they are. We should consider them not one at a time, but rather as a portfolio to manage risk. We're taking delta bets, we're taking volatility bets, and then we're taking a volatility scalp. All right, now it's time to look at the periods right after earnings. Everything we've done so far has either been long volatility or been vol neutral. Let's look at a short volatility trade now. We will look at selling an iron condor. So we will put all the FANG stocks back in here. We'll go to iron condor. We'll go to short. We'll go to custom earnings. And now we're going to switch it to 1 day after earnings. That's when we open it, and closing it 7 days after earnings. So now we're looking at our post-earnings trading, and this is 1 week. At the same time, instead of using the monthly options here, let's use the weekly options. So we'll put a 7 in. Now, it's pretty easy to see here with our short volatility trade that Facebook is the clear winner. We see a 63.6% return with 11 wins and 1 loss. We can go to 2 years as well. Now, over the last 2 years, this trade has won 8 times and never lost. And again, this 44% return is over just 8 weeks of trading. Now we have our first post-earnings trade, And this is also our first short volatility trade. Now let's look at our second post-earnings pattern, and this one is to own the volatility. This trade is also right after earnings, but it's looking for a stock that moves more than the option market is pricing in. And there's no surprise here. We're going to take a look at Tesla. We're going to look to buy the Iron Condor. We're going to change our custom earnings to start 2 days after earnings and close 29 days after earnings. That is, we're looking to trade the full month after earnings, and we will use the 30-day options. We can see that owning the 50-20 Iron Condor, which is really an iron butterfly, has won 7 of the last post-earnings months in Tesla with a 107% return. You can also see how the other deltas have done here. I note right now that we consider Tesla's earnings dates the date that the company releases its quarterly automobile sales figures, not when it reports its revenue and EPS. Just keep that in mind if you trade this name. That's when the volatility occurs. All right, we went pretty fast, but even just limiting ourselves to a handful of stocks, we found 5 great trading opportunities surrounding earnings. We found that we could play momentum optimism in long calls for Google and Facebook 2 weeks before earnings. We found a delta neutral volatility momentum trade, which was long and Apple straddle 1 week before earnings. We found a volatility scalp in Amazon with a sophisticated long straddle, short straddle play. But remember, none of these trades stayed open during the earnings event. Remember that. These are not earnings coin flips. After earnings, we found other possibilities. We saw that selling the volatility in Facebook for a week was a winner, and buying the volatility for a month after earnings in Tesla was a winner. Now, of course, we just focused on earnings-related trades. If you like trading the actual event, we have a button for that. You can just click Only Trade Earnings and test any strategy you want, whether it be custom or pre-built during the earnings event. And of course, for all other times, you can always just select Never Trade Earnings, and you can do the same thing. You can create your own custom strategy or pre-built strategies. And finally, it bears repeating, while we just looked at the FANG stocks and Tesla, we cover every stock and every ETF and every index in North America as well. The opportunities are there. You just need to find them. So this is it. This is how people profit from the option market. It's preparation, not luck. Thanks for watching.
All right. So that was my little 10-minute video on earnings.
Which was totally awesome, by the way.
Thank you. And so I'm sure there are a lot of questions, but before we kind of get there, I do have back to kind of live. I do have some other things I want to show you that I didn't put in the video just because I thought that maybe they would be better if I showed them live. Is that all right? We have time for that?
Oh, go for it. Yeah, I could agree.
Okay, cool. So first of all, let's talk about something that's really relevant. I mean, Netflix earnings happened today, so we might as well talk about it. So the first thing we're going to look at, I'm going to put all of the FANG stocks, and when I say FANG, I mean AA, so I'm including Apple on that. And we're going to see if owning earnings volatility has been a winner. One of the new pro features we have right now is that you can actually look at up to 5 stocks just by using a comma delimited list. So that's what we're doing. So this is actually a new feature. Let's look at 3 years. We'll use the 30-day options. We're going to only trade earnings, and we're going to buy the 40 Delta Strangle. And we can see in Netflix that it's been a pretty big return, 200% return, although it's only won half the time. Then we see Google, or Alphabet if you prefer, and then Apple, Amazon, and Facebook are losers. But here's really how you start to use the back tester, right? So why did I choose 30 days? I don't know. I just put in a number, but it's a reasonable question to ask, well, what if I looked at the weekly options? Would that matter? So I'm just going to change that 30 to a 7. And we're focusing on Netflix. That 201% win rate, winning percentage went to 280%, and we actually won one more time. So again, we know today Netflix reported earnings and the weekly options priced in about a $12 move, and after hours it's trading at $18. Obviously tomorrow we don't know yet. But to see why this is working, even though the win rate is just a little bit over 50%, we just click on a tile, and this is what's happening. When this long strangle through earnings wins, it wins at it's $11,000 average win. I'm just doing a 5 lot. You can use whatever you want. I'll show you how to do that later, but I just put in a 5 lot just essentially arbitrarily. And we can see the average loss was about $4,000. So not only does this trade win a little bit more often than it loses, but when it wins more than twice as large as it loses. And of course, we can do this for any stock and any strategy, but this is a nice one that is relevant today. So I think we've actually covered earnings pretty well, but there's an entire world outside of earnings. So I just want to touch on a couple of ideas there. Let's just take a step back and look at how valuable having an objective analysis is for regular option trading, even if it's a really simple idea. So I'm just going to put in Apple. I'm going to go to 2 years. I'm going to try a really simple idea, which is that I'm going to sell a put. And for right now, we're going to do a naked put. So let's just wait for those results to load. All right, so you can see as the tiles load that selling a naked put in Apple has been a loser, which is a little bit weird because the stock is actually up over those 2 years. Here's this gray line is the stock chart, right? And Apple doesn't really have that downside black swan risk, right? Which is exactly what you're looking for if you're going to sell a put. But so before really looking at these results, I think it would have been a reasonable guess that selling a put during a bull market in Apple would have been profitable, but it isn't. But this is sort of where the vast majority of people stop. They look at this, dismiss the trade, say, well, yep, can't sell puts in Apple. There's no edge there. But let's just dig a little bit deeper. Rather than trading at all times, let's just always skip earnings. So we're going to close the trade 2 days before earnings, open it 2 days after earnings, and trade all 3 months. Let's just click that button. And we're going to see a 16% loser go to a 2% loser, right? Now, that's still not good. But it turns out that Apple's stock dynamics are such that when it has a bad week, it starts early. Monday and Tuesday tend to be bad if Apple's going to have a bad week. And that means this would be an ideal strategy to try a stop loss on. So I'm just going to come down here and put in a 30% stop. And before I hit go, just remember this 2.9% number, right? It's a loss. Okay, we're going to put in a 30% stop and look what happens. Right, we went from a 16.9% loser to a 2.9% loser to a 60% gain because we took less risk, right? And so if we click on the tile, we can see that just selling this naked put in Apple with a tight stop has returned about 59%, where the stock was up 17%. And whether or not selling puts is a strategy that you like to follow, especially naked puts, what we've really seen here is how powerful it can be just to have the tools to optimize your trade ideas. You had an idea, or I had an idea, to sell a put in Apple, and it turns out with a few steps, you take a pretty big loser and turn it into a pretty big winner with a high win rate. Now I want to kind of get away from stocks for a second for those of you who are vol people and ETF and ETN people, and I want to look at VXX, one of my favorite trades of all time. And so what I want to do is I want to test the idea of buying a long put in VXX. Sorry. All right. Sorry, this is a back test, a heavy back test.
Everybody's using the machine now as we're watching.
I know, exactly. So, all right, simple enough. Buying an at-the-money put in, okay, well, let me take a step back. For those of you who are not familiar with the VXX, let me just take one step back. It's an ETN which will always go down if VIX stays in contango. And contango is just a really fancy way of saying that the further out of the money VIX futures are priced higher than the near-term futures, okay? So here we can see that, let's focus, let's say, on the 40 delta puts, that buying the put has been a winner if we traded the weekly options. But it turns out that when VIX goes out of contango, it's for a short period of time and it's pretty abrupt. So hypothetically, it would make sense that if we traded longer-term options, this strategy would start to win more often and would start to have higher returns. So let's just try a 30-day option. And all of a sudden, it went to 159%. And this actually makes sense, right? This isn't just us clicking on a couple buttons and hoping for things to work out. It makes sense that when VXX start to go up, it goes up abruptly, but for a short period of time and then comes back down. And we can even check out the 2-month options if we traded this every 60 days. And now we're looking at a 180% return with a 70% win rate. And for those of you who are not familiar with the VXX, for the 9 years it's traded, it is now down 99.99%. This is actually a trade that does continue to work. But there's something else we can look at, right? We haven't looked at any stops here, and so we can go ahead and try a stop and see what happens. So I'm just going to put in my 30% stop. Let's remember this 180%. Let's see what happens. All right. Oh, maybe I had a 30% stop in there. Sorry about that. Pay no attention to the man behind the curtain. All right. Let's try this again. Sorry about that. VXX long a put. All right. And we'll do 60-day options. We'll do it over 3 years. And we'll put in a stop loss. All right, so this return before we put in the stop loss was something like 190% or 180%, and now it's 230%. So the stop is working for us, but notice the win rate, right? The win rate is now 42%. So this trade wins less often than it loses, but the returns are just huge. So this is actually sort of the decision for the trader. I'm going to take the stop out and show you the difference again. Just look at the win rate. Now it's a 68% win rate. So, you know, this is a decision for each trader. For those that want to optimize returns and are willing to take trades that lose a little more often than they win, but when they win huge, you know, you'd put on the stop. For those of us that like high win rates, as long as the returns are still pretty good, we probably wouldn't use the stop. What kind of trader am I? When I see something like this, I prefer the higher win rate on this. 180% in 3 years on this 2-month option sounds good enough for me. And finally, I'm going to go to one of the banks. Since JP Morgan just reported earnings and everyone's talking about the Fed and potential deregulation and Dodd-Frank and everything's going on, let's just look at JP Morgan. I'm actually going to look at a put spread. I'm going to customize my deltas. Sorry. All right. And obviously, we're going to sell a put spread. And so we are selling a put spread in JP Morgan every 60 days. This is what it looks like if we trade all the time. If we just avoid earnings, because this isn't an earnings bet, we go all the way up to a 70% winner, which wins 75% of the time. We can look over 3 years. Right? Very similar results. This trade is pretty robust, which is to say as we keep going into different time frames, here's 1 year, we see similar win rates and returns. And just for completeness, just for fun, I'll show you a covered call. How do you trade a covered call in JP Morgan, right? You wouldn't do it this way. Well, actually, let me try a covered call. There you go. So what this also does is it shows you if you're going to do covered calls in JP Morgan and you're going to use the 2-month options, the backtester also shows you which deltas to trade. So it turns out selling the further out of the money options over here gives you a higher return and a higher win rate as we look at a backtest of JP Morgan covered calls. And so this is essentially the end of my formal presentation. And I kind of end every presentation the same way. I just say this is how people profit from the option market, right? We take an idea and we optimize it. And then, okay, so what does optimize mean? It means that we take a stock or an ETF that we have an idea. And then we figure out what's the best expiration to trade, what are the best strikes to trade, what are the best times to exit, and what are the best times to put stops and limits. It gives you a full trading strategy or a full trading plan, and it's totally objective. So thanks for listening to my movie and my presentation, and I'm happy to take any questions.
And I would say, first of all, as the questions are coming through, you know, for you guys that if you have not seen this before, and I know some of you guys are already using it, if you're interested in this, let me show you. I'll give you a link real quick. But the idea with this, and I'm just going to grab the screen real quick, and then I can give it right back to you.
No problem.
And by the way, it was great watching that. I mean, I use it. And just kind of watching it, you know, you kind of get into habits, and it was like, oh, I didn't even know. Like, I actually didn't know you could do the multiple. I hadn't seen that yet, so that was really cool. So one thing I played around with this too, and I really like this because of the earnings, right? So with some of the earnings stuff that pops up, and some of the things that we could look at, the stuff that I have found out that has really stood out. Gotcha. Okay. Is where you can take something like Priceline, okay, and this custom earnings is just pretty amazing to say, like, okay, so, you know, if prior to earning, let's say we did something 14 days before earnings and we closed it out day of earnings, okay, and we're just going to do long calls, right? Well, if we go deep in the money, it's 182% return, but you're going to see that the win ratio is like, man, you got clobbered a couple times holding on for that, right? And then if we go through here and say, wow, look at this one was 500%, but again, you're kind of getting clobbered. And so the idea is a couple things here that you can really learn about with this is the behavior of the stock, okay? And one of the things that the stop losses do, and this is like, say if you put in, like I say, a 30% stop loss on this, it'll show you the behavior of the stock and say, well, gosh, you can do that and say, like, if I have a tight stop on this, it's ridiculous because this is, the way this stock moves, okay, it's just like it's something that's going to get its head ripped off. Well, what if we did weekly options, instead of the ones that are 14 days out? And so you can go through like this and just kind of continue to tweak it and say, oh, and what's happening is you're identifying the behavior of the stock prior to earnings, mathematically and statistically. And what's fun about this is you can literally kind of go through and to say, and part of this too is I think a lot of this is that, yes, there's people that are trading this stuff, and yes, that there's machines, and what happens is they get into patterns. And with options, of course, we're also playing the possibilities of declining with premium and shrinking premium and things like that, which are fantastic because it also makes money if the stock's going sideways, right? And so I just found that for me this gets to be a lot of fun. So I will, and I'll turn this back over, but I just want, for those of you that are interested in this, and we'll put this link up, but it's simplertrading.com/CML. I believe that the price just went up on this, but if you use this link, you can still get I think it's like half price or something like that, which is pretty amazing. This is a tool that everybody should have in their repertoire, and you can, play it on earnings like we're doing right now with some of the earnings that are coming down the pipeline, or if you've just got a stock that you like and you want to play with, and there's just so many different things that you can do with it. So, with that, Ophir, I'll turn it back over to you and just kind of see what kind of questions come in. But there's so many awesome and fun things you can do with this, and it's great watching you work the machine.
Sure, thanks. Yeah, so what I showed during this presentation, parts of it were the pro version, which is now $99, but for this, $99 a month. But for this webinar and through our trading session that John and I are going to have this week, either Tuesday or Wednesday, I think maybe it's Tuesday, it will be $49 for Simpler Trading members, so everyone on this webinar. But then after that, in 2 days, it's going to be $100. So I think it's a pretty good opportunity to get a pretty good opportunity to get a professional piece of software for it. It's really not, $99 isn't even going to be the final price. Eventually, this is going to be $3.99 a month. But everyone who signs up now is never going to see a price hike. So you're never, whatever price you get today, or the truth is at any time, we'll never raise the price on you. But this is eventually going to be $5,000 a year. For now, it's about $500 a year. So I'm going to try and figure out how to see questions, so bear with me. Sorry.
Do you see, you'll see like I don't know, you see the drop-down bar that says Q&A, and then you just got to scroll down to the bottom.
Absolutely. I'll scroll to the bottom. The sign-up link isn't working right now. I think that's a Simpler Trading thing.
That's awesome. I'll try it out.
So I see someone ask, is it too late for this earnings season? It isn't. So there are a lot of trades that we just go in the software. We have a section. You can actually see it in the top of John's screen on the right. It says Discover. And under the Discover tab, we write 3 to 10 dossiers or little trade setups a week, just to sort of not only show how to use the tool, but to show ideas that are relevant. So there are a lot of opportunities the week before earnings. I think I showed it in Apple, where you can just be straight long vol into the event, delta neutral. Also, post earnings, there are a lot of trades. There's in JP Morgan and Wells Fargo, we'll see how it goes this, it starts tomorrow. We'll see at the end, starting the close tomorrow. But in JP Morgan and Wells Fargo, selling an out of the money put spread 2 days after earnings for the month following earnings has won all 24 times. So 3 straight years for both. So we'll see if that's true this time around, but at the very least, it's a high probability trade. So market conditions have changed so much in the last 2 or more years, so wouldn't you still want to look at a closer time frame, 1 year or less? So that's actually a great question. And it's actually a very intelligent question. A lot of people say, wouldn't you want to look like 5 or 7 years to do back testing? And with stocks, you would.
So with stocks, you want to look further back sometimes. With options, it's actually the case you want to look at slightly closer. So we're going to add 5 years of history. Personally, I don't think I'm ever going to use it. So I like 2 years or less. I do 2 years and I check 1 year and I check six months. So that's a really good question. If you're trying to look at kind of momentum patterns like we looked at, whether they're in stock momentum or volatility momentum, I would look at least 2 years, but I don't know that looking 5 years would be as helpful. Sorry. Is this browser-based? This is browser-based. You don't have to do any kind of download. You just log on to a website. Does this do butterflies? It does. This has custom strategies, so you can create any strategy you want, and you can save it, and it's private to you. How do you get training for the program? We have videos on how to do everything on our Discover tab. Link not working for me either. What's the cancel policy? So you can cancel at any time. It's month to month, and if you don't like it after 3 days, just tell us and we'll refund you. It's fine. We're not here to try to take money from people who aren't using it. We have a very low cancellation rate, let's put it that way. A little bit of my background. Yeah, really good question. So I'm a former market maker on NYSE, ARCA, and SIBO. My background before that was in financial mathematics, machine learning, and measure theory. I did my graduate work in mathematics at Stanford. I'm now running Capital Market Laboratories, and we are members of Thomson First Call, so we are institutional research. And so our goal is pretty simple. It's to empower every trader to have the same tools and information that are available to the top 0.1%. So this is going to be available on Reuters, on the Icon terminal, but those are institutional prices, right? And we're trying to price it for everyone else, the non-top 0.1%. So that's a little bit about my background. Let's see.
Yeah, it looks like we crashed your server, but it seems to be coming back.
Oh, I can actually fix that. Let me get out of this. Sorry. Good job, guys. Let me open it in another web page. All right. I can just give it a little juice. I'll get to questions in a sec. Let me just straighten.
Yeah, go ahead. I can answer some questions too.
Okay.
One of the things you'll find too is, which I thought was kind of fascinating. I think my screens are still being shared. Yeah, it's
yeah.
Okay. So if you come over here like to the VIX, right, and you always say, oh man, I think I want to buy some calls. I'm going to buy some calls, on the VIX, because that's a good hedge and things like that too. And you can see over the last 2 years, if you did that, you had 10 wins, 85 losses, and you lost 98%. And you do that across the board. And actually kind of like finding anomalies like this, because then you could say, well, gosh, if I sold calls, okay, obviously you could reverse that, but then it's insane to sell VIX calls naked. There goes my dogs. It's insane to sell VIX calls naked because, what happens that one time it goes up 60 points or something like that. It's like, okay, well, great. Then you could do a call spread. And then all of a sudden you've got an interesting, you've got a solid risk to reward, right? And, oh, sorry, let's do the sell the, oh, and did you see there, like right there when you get an error and it says, oh, you've got options that conflict with each other, and then you can just kind of go in here and you can do it that way. The other one here that I like to look at is just doing something as simple as Facebook, right? And just saying, okay, I want to, if I'm trading Facebook and I want to do a long call, kind of a custom earnings here, 14 days, sell it on a day of, right? And you can just kind of look at this and say, okay, great. You'll notice here that that's weekly options. Well, I don't want to roll the options. I want to stay with the same option. And you'll see that that actually significantly will increase the returns, right? Well, the idea is you're actually playing that option series that has the high, the implied volatility that's rising. So let's do this again. 7 days, you'll see it's 130, 130, 103, 74. But in this case, if we do 14 days, since it's 14 days before earnings, this is going to be the same option contract where the IV is rising the entire time, and watch the difference. So now it's like everything's kind of doubled, right? So these are the things, and this is where I get really excited about things like, yeah, let's, we're 2 or 3 weeks out, but I'm completely fine buying an out-of-the-money call in this instance where a stock's going to be releasing earnings because we get a free ride. The implied volatility is going to be rising, so even if the stock goes sideways, at least it's a scratch. But if this, the stock actually gets that momentum going in there, and then you can also see it's like, well, gosh, the win ratio isn't that great. It's like 50% win ratio, and then that's where you can go in and say, well, okay, let's say if we get a 50% loss, is that something that we can cut it loose at that point? And just start tweaking it around different things like that too. I just find though with these earnings trades, I kind of like to do it as a time trade, right? And then you just position size correctly. One question that's coming up, if you're not in server mode, is you said that it only comes with the pro version. Is this what we're talking about? That's the pro version?
Yes. So every feature that you've seen, as well as features you haven't seen, are, as of right now, are available for $49 to simpler trading for the next 2 days. So everything you've seen, this is the pro version. The multiple tickers, the custom strategies, you can actually time your stops, things like that. So I did check on what's going on, and actually it is just traffic. We're in Amazon, and for some reason Amazon isn't scaling up with the traffic. So don't give up, or save the link. It's pretty disappointing. I'm sorry that Amazon isn't scaling up, but that's what's happening. I looked at our CPU usage, not to get too technical, and it's off the charts. so
we'll be shorting Amazon tomorrow.
Yeah, it's as an aside, I don't think Amazon's web services is as strong as people think, but that's a side. I can try to see if there's any more questions. Does this run on Chromebook? This should run on everything. It should even run on a phone. It's just on a phone, it's a smaller screen, but it should actually scale to mobile. So the scan feature right now is in beta. That's someone just asked, what is the scan feature? That's coming soon. So everything I just showed you, so I said, look, let's take a 1 week, or let's look at John's trade. The 2 weeks before earnings, buying a call, not making the earnings bet, but trying to run on that optimism. We're soon going to have a scan feature in there where you can just say, hey, I like this strategy. Show me how it's done for all 5,000 optionable stocks in North America. And by the way, rank them for me.
Oh, awesome.
Right. So the scan feature is coming. So I encourage you to sign up now, not just because, hey, I want you to sign up, but I'm telling you, this is going to be a $400 a month product at some point. And it's going to be because of features like scan, because of things like that. This is going to turn into legitimately a trade machine, right? So you're going to say, man, I would love to I don't like taking delta bets. I just love the idea of owning volatility before earnings, just before earnings, and then close it before. But I don't really know, testing 5 tickers at a time is kind of crazy. Well, we'll just do 5,000 for you at once. And so that's coming. Yes, this is month to month. There are no contracts. That's it. We're that easy to work with. Someone said, can I review the first Facebook and Google trades? So that movie that I played is actually available if you come to Trade Machine. So you can just watch the whole movie all over again. It's recorded. Let's see. Sorry. When will your trading? Can't answer that. I think we are approved for soft dollars actually, but I'm not sure. It's an interesting question. Someone says they used the Google strategy for earnings and already made 2,300. Good, me too. I just bought the call. It's working. What would you scan for to do with Netflix? So post earnings trades I like, although everyone has their own style. I have found that in this market, there tends to be a dead spot, in particular with the companies that are not dead. So Netflix, there's a lot of excitement going to Netflix earnings, and you saw that even owning the earnings vol has been a winner. But it turns out if you wait like 2 or 3 days after it for the month later, it's just like all the excitement is gone, and the stock kind of doesn't do much. And if it does something, it generally doesn't go down very much. So the post-earning trades I like to examine would be selling out of the money put spreads. Of course, this is after earnings and after the stocks do all their gymnastics. So let's say 2 or 3 or 4 days after earnings. So the stock does everything it's going to do. All right. We do have training manuals and videos. Yep, that's a question.
One question I saw a couple times is if we sign up for $49 today, you're telling me that my subscription is going to go up to $99, and the answer to that question is no. What you can do is by signing up for the $49, you're actually locking that in for life. If I That's correct, right? Okay, so so you're going to see it go up, but you'll be locked in. And then the other question that came up a couple of times is, how can the stop loss work at earnings when the option price can crash overnight? So a lot of if you look at the custom earnings, what we're doing is, in many instances, we're not holding, and I actually don't hold long options through earnings, but we're closing the position the day of earnings. So this is the idea here is it's run up in the earnings, but don't hold through earnings. Okay, and then you can say like, okay, great. Then, the day after earnings, and for the next 14 days after earnings, okay, then I want to sell a put spread on Facebook, which apparently doesn't work. So the idea is that you're looking at these things, but you're not holding through earnings. If you want to hold through earnings, then you'd hit only trade earnings. But I in particular don't like to hold long options for the most part through earnings. I look to play more the Ivy crush.
Exactly. What John said. Yeah, exactly. I generally don't like to play earnings the actual day of earnings. I like to trade around it, and that's a very good question. It's actually really important. Understand a stop, right? That shows an understanding of a stop. Yeah, you can have a stop loss all you want. If you're holding overnight for earnings, you're not going to stop out at the price you want to if the stock moves huge. So that's actually a really good question. This does not work on futures options. That's a question we have. It does work on index options. It does work on ETFs. John, can you click on the Discover tab? Someone just said this.
Yeah, I actually have not used that.
Okay, so on the right-hand side, if you scroll down, you'll just see 3 to 10 a week. We just, you can click on any one of those and you'll see a story.
Okay. Oh, so these are,
Yeah.
Okay. Oh, these are the ones that come in the email and everything. Okay.
Exactly. So that's not good.
We're destroying your server. Let me try this one.
Which shouldn't be happening. We automatically scale. Okay. So that was actually my fault. So that's so I was talking about the Wells Fargo trade. Just scroll down a little bit and you'll see this is a trade that has won. I did it, 30 days after earnings. I'm sorry, 2 days after earnings for the month after, and it's won all 11 times. So the Discover tab has that. The Discover tab also has all of the training videos. So you're like, yeah, well, how do you use the stop loss again? Or like, when are you placing trades? Or like, how does the rollover work? That's all in the Discover tab. It's all there on the left-hand side under frequently asked questions.
Oh, nice. Okay, perfect.
Yeah, so it's all there. In fact, you're more than welcome to email support. Most of the time, we just take that link and send it to you and just say, hey, here's the answer. How long is the contract, or can you cancel at any time? The contract is for a month. You can cancel at any time. Backtesting over 3 years is not very long. How would you know what stocks as they trade over? Okay, so we're going to be adding a 4th and a 5th year to history. We're actually holding it back on purpose because I don't think it's best practices to use 4 or 5 years in option backtesting. Having said that, it's not for me to decide. So I've been overruled, and we're going to be offering 4 and 5 years. I just want to point out that option trading is volatility trading, whether you mean it to be or not, and understand that volatility tends to move in about 2 or 3 year cycles. So just know that. 5 years would probably be 2 vol cycles. Let's see. Are there tutorials that come up with the purchase of this product? Yes. Actually, when you get a welcome email, you'll get a second welcome email, and you will see a bunch of video tutorials. Yes, I think we've sort of covered it. The $49, if you sign up today and get it for $49, that's for life. We have no access to raising the price anyway, so don't worry about it. That's all with PayPal and Stripe. We couldn't raise it even if you asked us to. How does the tool determine which delta to use? So actually, we have some deltas built in, but you can customize your deltas. Yeah, exactly. John will show you. If you click the settings window, right where John is, you type in your own deltas. Now, if you don't want to, you can uncheck use my own deltas, and we show some in the money, at the money, and out of the money deltas automatically to get you used to using the tool, but you can set them up yourself. With Apple reporting on 8/1, would this help a short trader in the short term? I think it would. You can take a look at some of the trades. The Apple trade that I'm most interested in pre-earnings is owning the volatility 6 days before, and we use calendar days, not trading days, calendar days. Okay, so we do not do futures options. You can definitely do diagonals. You can do calendar spreads. That's all underneath the custom strategy. So at the very bottom of strategies, there's something that says custom, and you can create your own strategy, and you name it, like a my calendar spread or something. We do have an API to the access to the service, but that's a vastly more expensive service. So if you're interested, call support or email support. Sorry, trying to make out some of these questions. Okay, someone asked about CML Pro. That's a different product. That's equity research. This is for the backtester, which is Trade Machine. The pro version of CML as of this moment is not extra for anyone who's on this webinar. I've asked that a few times, right? So it's $49 today, goes up to $99, but not for you. Whoever signs up today, their price will never change. You'll either be paying us $49 a month, or you'll be paying us $0 because you canceled, but you'll never be paying more than that. Right? You can cancel, lock it in, cancel at any time. And the truth of the matter is, guys, if you try it for 2 days and don't like it, just tell us. We're going to refund your money. We have a very, very low cancel rate. So if you don't like it, then that's all right. It's not for you. That's fine. John, maybe you can answer this. What's the deadline? When is the trading session and stuff?
Well, let's see. What we could do is just say, if you have to get in the next 2 minutes, and if the server doesn't come up, that's too bad.
Yeah. No. I think that's a little harsh. I like that.
No, I think what we can do, did you want to we could, especially with like the server and stuff, just want to keep it open till the end of the week? Is that how you wanted to do it, or?
That's absolutely fine. Anyone who wants to get in at this price that was on this webinar, and for some reason you can't get in, we're going to honor it. Don't worry. We don't really work that way. I think that's actually very, very similar to Simpler Trading. We're very friendly. We're easy to talk to. We're not trying to trick you or anything like that. So if it's a little slow today, it won't be slow tomorrow. Do we create a new password? Yes, you do create a new password when you sign up for this product. So this is not, I guess if there's a password for Simpler Trading, this is a separate entity. So you'd have a different password. Okay, I think I've covered tutorials. They're all in the videos, and I send them out. Sorry, just trying to find some more questions that are not. Okay, this is a great question. Can we use implied volatility as an input variable to test a strategy? So, for example, let's say you say, I want to try this strategy, but I only want to buy a straddle when the IV rank is 25 or lower. So that's coming. It's not yet. But these are the things the scanning feature, these are the things that are going to turn this into a $500 a month product, but you'll be paying $49 a month. So the answer is not yet, but of course we're going to do that. So you will be able to trade on volatility ranks, which some people call IV percentiles, all the same thing.
Hey, I have a question for you, and I don't know if you can do this now, or maybe you can. So let's say, there's going to be, if you're looking at an option series and you know that, there's weekly options, and that 4 weeks out, that's the week that there's earnings. And so that's the option series where the IV is going to rise. Is there a way to do it? Well, I guess you just have to type in, 36 days to expiration, but so you can actually just test the options during that week, like different strategies that'll be, as the IV is increasing, week after week after week on that one option series?
Sort of. So what we have done is, if you're using custom earnings, that date that you use a lot, whatever date you put, let's say you put 14 days before earnings, or
okay.
let's just say 36 days, but you put 36 days before earnings. If you put 36 days for rollover, so days to expiration, if those two match or they're less, we will never give you an option that expires before earnings. Right. So you will always be able to test.
Okay, perfect.
Yes.
Got it.
You'll always be able to test your volatility idea without seeing, while you're making sure it's the options that have the vol in them, of course, because that's the test, right?
Right.
Yeah. So
got it. Okay, that's great.
Yeah. So it has a brain. I mean, this was created by traders. So, when we looked at it and said, well, why is it giving me the 35-day option? That's not what I want. So it will always, as long as you're using this, it's almost error-proof. If you're finding weird results, we can usually explain it with like the click of a button. So yeah, it will only show you the options you're interested in.
Okay, perfect.
I missed the presenter's name. My name is Ophir Gottlieb. That was an easy one. More of those. So this is, will I be able to submit my stock watch list for analysis? So not yet. So that's another feature that's coming. We're going to have a grid feature where you say, I'm interested in 50 stocks and, I don't know, kind of anything. Just show me some cool option strategies. At some point, you'll be able to put in like 50 stocks and just hit go, and you'll see how they rank by covered calls, by put spreads, by earnings trades, by whatever. These are all the things that are coming to the product eventually, and that's what is going to make it a 10x product. It does not work on futures. Okay, so a lot of questions about when do options close? So we use end of day prices, actually right before end of day, before the markets go wide. So everything you see here uses end of day prices. That goes for stops, that goes for well, obviously expiration is end of day, things like that. So that's what we use. It does work for all optionable stocks and ETFs. Okay, great question. How are the risk percentages calculated? So if you go to the Discover tab, you'll see how we use margin. We talk about the different types of margin, the margin that SIBO has decided is the best, and we show an example of every single strategy, long and short, dollar for dollar, to show you how risk is calculated, and percentage return is just the return based on that risk. So we are extraordinarily finicky about the way we measure risk, so it matches up with what your broker is probably charging you for margin. We want to make this realistic. Says, please tell me how to access your recording. Actually, if you, the sign up page is down right now, but if the sign up page was up, you would see the recording there. Okay. Is this for earnings period only? Oh, no. So this is definitely not for earnings period only. I was focusing on earnings periods because this webinar was kind of about earnings, but this is actually for all times, earnings, not earnings, and everything in between. I think we're actually getting close to the 6 o'clock. I don't know if I should stop.
Yeah, you know, and I think it's, and one of those things too is for those of you that are, I know, and a lot of you are already using this tool, so, you know, we can do additional sessions in the room. I actually, the stuff I learned tonight, I actually did not know that you could do the 5 symbols at once. That's pretty awesome. When you do sign up, what will happen is you'll get emails where Ophir will test and say, hey, by the way, I just found this great strategy on JP Morgan. So that one that he showed you in the Discover tab, I saw that on an email. I just didn't know that you could go to this Discover tab and do that too. So what's great about stuff like this is that as you start to, you know, use it, it's kind of like, you know, the more you get familiar with it, the more things you can do. And so I'm just excited about, you know, I hadn't really played around with the custom earnings that much. And now that I understand it better, as soon as I've got my day tomorrow already planned out, kind of playing around with that. So that's gonna be a lot of fun. And again, what's fun about this is that, and I think every trader develops their own theories, and it's not something I can prove, but you know, I think 2 things. One, I think different stocks have different personalities based on, you know, how many algorithms are trading them, how many people are trading them, whether it's attracted to day traders or not, right? But I also think that people need to, if they're going to be successful discretionary trading, they want to kind of match their personality with the right, you know, markets and the right stock. And something like this helps because it takes out a lot of the opinion. You know, it's more based on the kind of like the facts, the science, the actual stuff that's happening. And I just find that that's really helpful because it kind of gives you a little bit more confidence of, you know, so you can sit there and say, well, you know what, and the best example I can give of this is with options. Some people just like to buy options. Like, okay, I'm only going to buy a call. That's all I'm going to do. It's like, okay, great. Well, go through and test and see which stocks buying a call works on. How far out should you go? Which deltas you should do? And it can be as simple as saying like, wow, you know, if I would just buy delta 70 calls, you know, 21 days out instead of delta 30 calls 7 days out, my returns just tripled, right? And this is an extreme example. I think if any of you have been trading options for any length of time, you know that, you know, just buying calls is you know, you're missing out on a lot of the fun that options trading can provide. But what happens is you can, you know, these are those little nuances, and options are their own unique kind of animal within the markets where, yeah, we all get it that if a stock goes up, a call option is going to go up. But, you know, if a stock tends to trade sideways, those calls over a certain amount of time will also expire worthless, and we can actually sit there and just kind of mix and match all this stuff. And it's a lot of fun. And if you're a tinkerer or kind of a, you know, like to play around with backtesting, you can have hours of fun with this stuff. And it's hours of fun that turns into actionable, profitable ideas. So that's awesome.
Also, I found even after 2 decades of trading options and being a market maker, the idea of knowing exactly what you're going to do in all cases just makes it much easier. If you've determined that you're going to have a stop because you like the way it looks and you prefer to have the stop, then right? And if you're going to do a trailing stop, that's fine too. But it's a lot better than looking at if you ever find yourself caught kind of watching the paint dry, which is just kind of, you're just watching a ticker tick, something's not quite right with your strategy. You don't feel confident that your strategy is going to tell you what to do. And this gives you that strategy. It gives you that comfort. I didn't know that I did this, but it turns out I actually did stare at tickers for quite some time, and I stopped doing that as much. And what's funny is it was a mistake I was making that I hadn't even realized I was making. So it does give peace of mind to know exactly what and when you're doing a trade. I would definitely agree with that.
And there was a recent study just released, and that has proven that there's actually an inverse relationship, that the harder and longer you stare at a ticker, the less impact it actually has on the stock price action.
That's right. Even though I was sure I was moving Apple with my eyeballs easily. But don't watch the paint dry. It's not helping your trading. You either have the wrong trade on and you need to close it, or you don't have the right strategy. This is objective, Okay, I want to answer one broad question I keep seeing. A lot of people are saying, hey, are you going to raise the price on me? Is this going to go away? Okay, so I'll just try to answer it one last time. So if you sign up, not just today, let's say to the end of the week, because we're having a little trouble with the sign up page, it's $49 per month. You can cancel whenever you want. If you come back and sign up later, you're going to pay whatever the going price is. It will not be $49, but your price as a member, if you sign up now, will never go up. We have no access to that. We could, even if you told us, hey, I love you so much, I want you to raise the price. We couldn't. We actually don't have access to that. Having said that, I also want to be clear that in some months coming forward, you're going to land on this page and it's going to say $199, $399, $499. The price is going up as we add pro features like scanning, like grid scanning, like alerts, like text alerts, like things like that. So for right now, it's $49 a month. Your price will never go up unless you cancel. If you cancel, you'll pay $0. Works out pretty well. And we'll leave this up until Friday. We'll make sure everyone who wants to get in gets it. You won't be locked out. So I think that's it, unless you want me to keep answering questions, John. I don't know.
I think I think we've got because the general theme of the questions I think has been answered, and and you guys feel free to reach out to us or to CML Viz directly too. I mean, they're I think like us, we both kind of have the same philosophy of like, look, if you guys like this stuff, great, and we'll work with you on it, and if you don't like it, that's totally fine too. And if you have any questions, happy to answer. And I think you guys, again, I think you look at this stuff and just at the very least, try it out. It's just fun, especially once you understand the nuances, and just gives you a lot more confidence. And one of the things I remember when I first did it, I was just kind of going like, wow. I was playing around with it about 8 months or so ago, and I remember Alta, and I would just sit there and say like, okay, what are iron condors on Alta? How does that work? And it's like they never work. Well, if you set up a strategy that never works, guess what? If you do the opposite of that, it works great. And so I actually like finding stuff where it's like, man, 80% losses, because then you just kind of like, well, the other side of that trade actually looks pretty good. So there's some fun nuances like with stuff like that too.
Yeah, I agree. If there's a losing trade, there's a winning trade on the other side. Doesn't mean you want to take it, but if something looks really, really bad, then just click long or short and it'll look really, really good. Just make sure you mean to make that trade. I mean, don't just trade because the machine says so. Have a going thesis. Nothing can replace common sense, right?
That is true.
So yeah. So okay. Don't worry. I keep seeing the questions. It's the same thing. We will leave that page up for simpler trading. Don't worry if you can't get in this very second. A lot of people are, by the way, but we're not going to take this away from you just because there's too much traffic. So it's going to be all right. It's going to be all right. Yeah, I think that's it. Oh, do you provide? Yeah, we do. We actually, in a release this week, we're going to start providing the average winning trade and average losing trade, not just the total return. That was a big request, and so that's coming soon. I see someone asked that question. That's also coming into Pro, which everyone is getting. So yeah, we're basically always adding features, and we generally ask our community what they want in an email. So if you're a new member, and within 2 months, you'll get an email that says, okay, here are the 5 things we could do. What do you want to do? Which one, which ones do you want? And you vote, and we make the ones that everyone wants to, that everyone votes for. So the product is constantly evolving, and what you're getting today is nowhere near what you're going to have in, let's say, 6 months, 3 months, or, a year.
Excellent.
Cool.
Well, I think that's good. I mean, you guys, I know that this probably it's a good problem. If the server's a little slow, like I said, don't we'll leave this page up for a little bit, but you guys can obviously, if you have any issues, call, or we'll post the link up. I can talk about it in the room again tomorrow. And but otherwise, Ophir, thank you so much for coming on here and showing us some cool new features on this. And it's been fun watching this machine develop, and it just sounds like there's more and more cool things coming out in the future, and I can't wait to see them.
Awesome. Thank you so much. And thanks to everyone who was on the webinar. Simpler Trading community, something really special. And I think we all owe a debt of gratitude to John for what he's done. So thank you very much.
Thanks. Have a good night, everybody.
All right. Bye, guys.